kind of the merger stuff a little bit. Just reflecting on your trading career, what's some of the times where you've really messed up?
Sure. When I get in trouble, when I screw up, it's because I sort of veer out of the lane of what I'm good at. And what I mean by that is, at this point, trading for 12 years, I'm good at these events. I'm good at, analyzing some earnings. I'm good at following the research. That's what I'm good at. All the stuff we talked about before. When I get into trouble is when I decide, I'm going to trade S&P 500 ETFs today, or I'm going to trade the bond market today because, Trump's saying this and interest rates are going to go this way and the Federal Reserve is going to go this way. And, listen to the way what I'm saying right now. This is so not in my wheelhouse. I shouldn't be involved in it. And, at this point, I think I'm pretty good at these event names. That's something that I think I'm better at than a lot of other people. So then think about it. When I'm veering out of my lane and I'm going in and I'm trading macro stuff, trading bonds, trading S&P 500 ETFs, I'm getting into someone's lane where they're really good at it and I don't know much. And when I do that stuff, I'm going to lose because I'm playing against people that know more than I do. And so that's when I get into a lot of trouble. Now, that being said, this is important. The only way to expand your horizons is to try and do this stuff, right? Like if you're the first year trader and you're listening to this podcast, you're probably like, well, how do I know what I'm good at yet? You don't. And the only way to learn is you do veer out of your lane a little bit and you try it, but you got to start small. That's all I'm saying. You start small and you gradually go up and you see where you gravitate towards and what you end up being good at.
Yeah. Yeah, you got to experiment a little bit.
You got to experiment a little bit, but today, and this is something I still fall susceptible to this, sometimes it's because it's out of boredom, as a trader, I'm always like, when a trade is done, my mentality is, okay, well, what's the next one? And sometimes there is no next one. One of the hardest things in this business is sitting on your hands and doing nothing, being patient. And I know what a good trade looks like when I see it. But sometimes I don't want to wait for that. So I said, I'm just going to manufacture a trade on my own. And, doing that in a sleepy market, that could be dangerous. Another thing that is a really dangerous game that's gotten me into a lot of trouble is when I decide that I'm going to either short good news or I'm going to buy bad news. And that's a game where I've decided as the trader, well, this is up too much. Even though the news is good, this is up too much. And when it's bad, I say, well, it's bad. The news is really bad, but I don't think it should be down 20%. I think it should be down 15%. And, that's a crazy game because let's go back. Let's get into the heads of Fidelity again. If Fidelity is selling, they're selling. And they're probably not going to stop selling if it's down 20% versus 15%. So you're getting in front of this freight train hoping that, the buyers show up or Fidelity stops. So, that's something that always has tended to get me in trouble. I've had big losses doing that. Envy hurts me. Envy's real bad. If I'm sitting next to someone and they're trading a product that I don't understand and they're making a lot of money from it, I didn't trade Bitcoins and all these cryptocurrencies, but I know a lot of people that did. And they made a lot of money, and I was certainly tempted to do it, but that temptation was just out of envy because I wanted to be making that money. And if I did start trading that stuff and losing, then I would have been kicking myself. If I lost $1 short, buying Bitcoin, I would have been so mad at myself.
Yeah,
because it's not something I understand at all. I don't want to just keep. I'll just keep bringing up points and
keep going.
things that have hurt me, but. When I have an idea, if I think something's a buy, one thing that I tend to do is, and this is a big mistake, is I try to find things that agree with my point of view. So if a company had really good earnings reports, what I'll do is, and sometimes this is conscious or subconscious, I'll find the research notes from Goldman Sachs and Bank of America that reinforce my viewpoint, and I'll ignore the ones that disagree with me. And the reason that I'm doing that is just because, I want to be right and I want people to agree with me. But the truth of it is, I shouldn't be doing that. I should be listening to all different vantage points and all different viewpoints. That can get me in a lot of trouble. My tendency is to hold on to losers longer than I should. I'm sure that people who come on your show probably talk about that all the time. I hold on when I get into trouble when I hold on to my losers longer than I should. And the main reason I do that, honestly, is because I'm trying to preserve my ego, because I don't want to admit defeat yet. If I don't cover a position that's a loss, or I don't sell a position that's a loss, there's a slight chance that it'll come back and go the way that I want it to go. And how often does that happen? Rarely, right? If I put on a position, it's a slippery slope. If I'm putting on a position at 9:30 and at 1 o'clock it's way against me, I should get out. But I'm going to hold on till 4 o'clock because I don't want to admit defeat yet. And what ends up happening, it usually is at its most worst against me by 4 o'clock.
Yeah. When it just rips up into the close.
Yep.